Hi, my name is Alan from LMB Property. Welcome back to my YouTube channel. In today's video, I'm going to share with you the 5 investment strategies used by property investors to make money from property. Take note, I'm only referring to investment property. And investment property is something that you buy purely for investment and not so much for owner-occupied. Before we start this discussion, pause this video and think about your investment strategy. Here, what are some of the strategies you adopt in your investment journey? Think about it. I wouldn't be surprised some of you don't even have any strategies to start with. You no worry, you are all in for the treat today. With that, let's go. This is a segment that I believe many will be familiar with. This is how it works for those who are unsure. Buyers will look at new homes or new launch condominiums. After doing their homework, they will zoom into a particular new home that they like. Usually, they will buy during the initial launch since prices are typically lower. In the normal market, developers will usually raise prices if sales are good. This means those who bought early will have an advantage. We have seen these cases in most new launches in recent years, except for the selected few when developers cut prices. Then, this is a different story. Another reason why buyers love to buy new launches is because they know they are dealing directly with the property developers. If there is any dispute, they know the developers will not shy away from their responsibility, especially for reputable ones. They are also buying a brand new home that comes with new finishing and facilities. Such condo will usually be easier to rent out. But the most important thing about buying a new home is because of the progressive payment scheme. Investors, as you know, understand the importance of leverage or OPM or using other people's money. In this case, it is by borrowing with a mortgage. For those who are paying in cash, they can manage their cash flow according to the stage of construction. In short, the outlay in cash will be lower and less risk to their finance, and this also translates to higher return on investment or ROI. In most cases, after their condo achieves TOP, the investor will start to flip their property after the SSD period. Since the SSD is 3 years, without incurring any penalty, this means by then the condo will be ready to move in. That is why you see a flurry of activities for condos that are going to TOP. This also appeals to buyers who are looking at brand new, ready to move in condos to purchase. That is why the new home market is always active with investors, since there are a variety of unit types and budget to suit the needs of most investors. That is why I realized that those who buy new homes will continue to invest in new homes. This is because most make money from new homes. This will give them the confidence to buy another new home again and again. This is also a segment that is favored by most first-time investors as it is easier to understand. This is a segment that is very broad-based since the resale market is very diverse with so many properties to choose from. They can be small apartments to mid-size to mega projects that are in their thousands. Some are less than 10 years old to those that are more than 20 years and so on. Why are investors looking into resale properties? Well, some buyers see value in them if they are comparing against new homes in the vicinity they are selling at a much higher prices. These investors also love them because they can start collecting rental almost immediately. Resale properties are also physically there for investors to look at them before committing. But what is interesting about resale property is that investors see value in them. They buy because of the potential upside for capital appreciation. Some will buy a rundown property, refurbish them, and sell them after a few years. That is why this segment is still very popular with investors who are buying for their own stay come investment. Here, some will ask which condo or landed property to buy. Should I buy a 99 years one or the freehold one? Should I buy something that is near an MRT station or near a popular school and so on? Well, that depends on how you read the market. There is no one-size-fits-all approach. Some property may not be very appealing, but there are black gold hidden beneath them. On the other hand, Some may look like gold, but they are only gold flakes sprinkled on its surface. That is why property investment is very interesting. You need to have knowledge to make money, just like any other investment product. Let us go deeper into the resale market. The Enbloc market is a very niche market segment that is mainly suitable, in my opinion, for more experienced investors. I mean, if you just started off investing, you can also explore this segment, provided you know what you are doing. I doubt I need to explain what is Enbloc. If you don't know, you can refer to my earlier video on Enbloc and its procedures. What is the reason for buying an Enbloc property? It's all about their Enbloc windfall. The payout from a successful sale can be very significant. If you don't believe in me, let me share with you what some owners of the former Tulip Garden are making. Each owner will receive 4.3 million to 7.6 million depending on the size of the home. If you want to find out more, you can watch some of the earlier videos that I did. Take note, buying an Enbloc potential property requires a lot of time and experience. There is also a long digestion period. Don't expect to buy today and Enbloc tomorrow. It's not so straightforward. That is why for the successful Enbloc to take place, it requires the right market condition with the help of marketing consultants, lawyers, plus sale committee to see it through. Moreover, some Enbloc may take multiple attempts. This may deter some investors due to the uncertainty. That is why this segment is not everyone's cup of tea. If you are looking for rental yield, then preferably go for a property that is accessible to an MRT station or near a place where tenants are living near their workplace. Such property will usually be easier to rent out and have less vacancy period. However, one must also look at the supply in the existing area. If there is more supply than demand, this will translate to more competition and rental rate will go down. Since most investors are taking a loan for their property, any rental they receive will be used to offset their monthly installment. Unless you fully pay for your property, then the rental you receive will be considered as a steady stream of cash flow, and this makes sense if you are pursuing rental yield. In my opinion, if you are purely looking at yield, why bother to make so much effort to buy a property and rent it out? You can easily park your money into Singapore saving bonds that give you 3% to other investment assets that can give you higher return. Sorry, I buy property only for capital appreciation. If you are looking at rental yield, count me out. In today's market, many investors are stuck. They have money but no name to buy residential property due to ABSD. The next best option is to invest in non-residential properties. They will invest in commercial, industrial to retail properties. Commercial property refer to office spaces. They can be located in the CBD area, city fringe to heartland areas. The same goes for retail properties. They can be strata title retail malls, to HDB shophouse, to private shophouse. As for industrial properties, they are mainly strata title development all around Singapore. Here, new strata title space are always sought after by investors, just like new launch condominiums. They offer investors an opportunity to park their wealth in the diversified asset classes. For those who are eyeing this segment, I think you can explore some freehold factory that will likely be launched later this year by Fragrance Group. Are they worth buying? Here, I will do a video again when the time comes. Some of you have asked me why I left out overseas property in my study. This is a segment that covers countries from Malaysia, Thailand, Australia to United Kingdom and others. I don't have the numbers to justify if they make money or lost money. What I only know is as long as you hold them for the long term, you sure make money. However, the key question is, how long should you hold to see profit? As you know, there are many rules and regulations governing such properties that are open to foreigners. There will usually be higher tax imposed, a minimum sum that you can buy, and the type of properties that foreigners can invest in. In my view, such regulation only mean that foreigners are being milked for their money. Seriously, I don't like this feeling. The worst part is that foreigners cannot invest in what local can buy. This is a no-no for me. That is why I don't dare to say buying foreign properties is among the 5 investment strategies used by property investors. Here, if you have any interesting story to share on your overseas properties? Kindly share them with us in the comment section below so that we can all learn together. Here, everyone have different approach. Some may prefer new homes, some will go for resale, some will go for capital appreciation, others will go for rental yield. Then some want the best of both worlds. Whatever strategy you adopt, make sure you understand the risk and reward. I have come to the end of my video. I hope my video has enlightened you to make more money from property. See you soon.